Hello, I'm Debbie Bell-Hosking for FinextraTV and I'm joined by Guy Mettrick of Appian. We're looking at operational resilience and how technology like process automation can help with governance, risk and compliance. Guy, lovely to have you in the studio.
It's great to be here, Debbie.
Let's start off by setting the scene. In your view, what changes have you seen when it comes to regulation and technology over the last 3 years, and also its impact on financial institutions?
Well, I think you really need to take a look back to the 2008-2009 financial crisis. And what happened then was central banks and regulatory authorities' reaction to that crisis and the production of a wave of increased regulation around how financial services organizations manage their businesses. And that regulatory deluge, if you like, has really continued since then. And financial services organizations reacted in a very similar way. Initially, they clearly employed a lot more people within their risk departments, their client compliance departments, their finance departments, to manage all of the increased reporting and risk reviews that they needed to do. And those functions grew very large because of all of these extra headcount that they had to employ to meet all the demands of the regulators. There was a second wave when people started to apply technology to elements of some of those processes. And that had an impact, and that helped these organizations deliver better risk outcomes, be able to create better processes around compliance. But it still wasn't enough, and you still had a lot of very manual processes that were trying to join these disparate data and siloed processing systems. And this third wave, which we're seeing very much now, is about how do you join all of those systems together into end-to-end digital processes. And I think that has been something that has really taken hold over the last few years and will continue to be a trend for the next few years as a reaction to that level and amount of regulation that's still impacting financial services organizations. And then if you then combine that with some of the big changes that have taken place over the last 3 or 4 years around things like COVID, the implications of that were not lost on the regulators, and operational resilience because of that has created new regulations such as DORA in the EU, as they look to ensure that financial services organizations are able to adapt to pretty much black swan events that they hadn't been able to predict anymore. If you think about all of the disaster recovery plans that most financial services companies had, it involved moving en masse their employees to a separate building. Clearly with COVID impacting, that wasn't possible, and everyone had to learn and adapt to working remotely from home or from other areas. So that kind of view has really shaped some of the thinking around the regulation and some of the technology that's really started to impact financial services in the last couple of years. Things like cloud-based computing, outsourcing is also driving some of that thinking. So you now have a situation where operational resiliency is not just about how you organize your firm, but how you organize this supply chain of firms and organizations that support your organization. And there's a lot more attention being paid to that extended set of relationships that financial services firms have with other organizations, cloud-based SaaS providers being a point in case.
The keywords you mentioned there are technology and operational resilience. And so much has happened over the past years. But where we look at now, how can technology help facilitate operational resilience? Can you give us some use cases?
Certainly. So if you think about manual processes across an organization, they tend to be not very resilient. Reliance on people remembering how to do things, manual handoffs, cutting and pasting of data, which is still very common, use of Excel spreadsheets, emails, things like that. They tend to be not very operationally resilient, and also they tend to be quite risky in terms of how you run and manage your business. So automation, process automation is absolutely key. Digitization of some of those manual processes, being able to deliver that in a very flexible way, irrespective of where you are working within the world, being able to access and process work for and on behalf of your organizations is absolutely key. Now, if you think about that, and if you think about what operational resilience really now means, and it's much wider than those old discussions that we touched upon around disaster recovery. It's about how do you manage cyber threats? How do you manage environmental risks? How do you manage your supply chain risks? All of those processes need to have discipline and ideally that digital approach, which allows you then to evidence, ensure that your risk controls are being embedded into those processes and are effective and efficient, and be able to evidence those to the regulators, the internal audit functions within your organizations, to be able to show not only that you have resilience, but you also are able to demonstrate how that works and be able to make changes and adapt as the changing definitions around risk it grows, and also more operational resilience regulation comes in. We're seeing Europe very focused on DORA, but the UK, in Asia Pacific and the US are all considering and implementing operational resiliency regulations. So these things are going to continue. Organizations are going to have to adapt and change. Technologies that you're deploying now should be adaptable to change, because that's one of the things that everyone now realizes within financial services, is that change is a constant. So deploying solutions that work from day one, but maybe not in the future, that creates your legacy technology of the future. So always be aware of having solutions and systems that can adapt to that change is absolutely key to this.
And when you talk about technology of the future, it's only natural I should ask you about AI. And with there's new forms of AI emerging. Of course there are. What are the considerations of financial institutions when they are looking at AI enablement across their organization?
So last year, there was a huge amount of hype around things like generative AI, large language models. Now in 2024, I think people and organizations are looking to see how they can derive value from those new technologies. So we're moving slightly beyond the hype curve, hopefully. And if you think about how you deploy new technology, which potentially could have huge impacts across your organization, you need to do it in a controlled way. So part of the journey that organizations need to be on is to create the right teams with the right expertise to be able to assess the risks of deploying AI across their organization. And that is a good benchmark, I think, for being able to demonstrate that you're in control of the processes that you are deploying and the systems you're deploying within your organization. You also need to look at how you extract value from this investment, however, I think, and that's incredibly important. And I think we're at the stage now where people are looking to see just what the value is that they can derive from things like Gen AI. And I think the opportunity is there, and it's huge, but it needs to be managed and controlled in an effective way. This whole debate about public Gen AI, the sort of chat GPTs of the world, versus having your own internal large language models, I think that private data, AI data approach is going to be very prevalent within financial services, just because they have the data, but also they have security concerns around sharing their data with other organizations. So I think that private data approach is going to be very prevalent within financial services organizations. And if you think about that, then the use cases, I think, become very clear. It's worth noting that machine learning has been successfully applied to elements of a financial services organization's business successfully for many years around things like fraud detection, anti-money laundering and KYC. I see some of the newer AI technologies like Gen AI really starting to help in other areas around governance, risk and compliance. If you think about how organizations run and manage their processes across their organization, it's in their policies and procedures documentation. They embed their risk controls, they embed their compliance into those processes. Being able to take that information, run that through a large language model and be able to derive insight from that, I think examples like that are going to be hugely important. So being able to link upcoming and new regulation to existing policies, procedures, obligations, risk controls, all of that is going to be tremendously enhanced with the use of things like generative AI. But you can see use cases across the customer journey, being able to service your customers much more effectively, especially your complex customers that might have many different interactions with your organization. That in its own right is a hugely difficult thing to be able to manage, given the amount of data that you have within your organization supporting all of the different lines of businesses and products that financial services organizations offer. Being able to use generative AI to consolidate that information and be able to summarize it very effectively, I can imagine will have a very large impact on customer servicing and being able to manage the complexity of those relationships across products and also across geographies.
Guy, thank you. It's so interesting when we talk technology, both now and how it's going to evolve ahead of us in the future. And it's circumference within operational resilience. So really interesting conversation. Thank you very much, Guy.
Thank you, Debbie.